Welcome to the Popi Boardroom. Today we're pleased to have Peter Koulizos attend with us to tell us a few things about his experience with Popi. Welcome, Peter.
Thank you, Sean, for having me.
Pleasure. We thought we might start with you, just give us a bit of an indication of your background and your interest in property, and we might work from there.
Sure. I lecture in property. I run the property investment course at TAFE in South Australia. Also teach in property valuation at UniSA, and also teach in property investment for Victoria University in Sydney, Melbourne and Brisbane.
Yeah.
Written a couple of books on property, one called The Top Australian Suburbs, so basically the best places to buy, and my latest one is Property versus Shares. I've been interested in property since I was a little kid because my dad was a real estate agent, so I've had a great interest in property for many, many years, and as I grew up I put into practice what I'd learnt and slowly bought investment properties and built up a portfolio.
Fantastic.
And then have a job that I love because I'm actually teaching a particular topic that I'm very interested in and
passionate about.
Yeah.
Fantastic. Well, as you know, we at Popi are pretty keen on property as well.
You certainly are. You certainly are.
And you were our first Popi candidate, our first investor. Congratulations on that.
Thank you very much for that.
What I'd like to explore with you is your understanding of Popi and what it was about Popi versus direct ownership that led you to be our first investor.
Well, I've been investing in property for a long time now, well over 20 years. So I've had many tenants and still got lots of tenants. One of the great things for me about Popi was I don't technically have a tenant because the person that lives in it still owns it. So I won't get the phone call from the person that's living in it, or I won't get a phone call from a property manager because there's no property manager involved. Pete, hot water system's gone, we've had some trouble with the tenants.
Yeah,
that's not my issue
for you. Yeah.
Repairs and maintenance, that's not my issue. Council rates, that's not my issue. Another great bonus is land tax. Now, as many investors know, as you continue to accrue property, especially in a particular state, your land tax builds up exponentially because I technically don't own the property. I control it, I don't own it, I don't have to pay any land tax. So there's plenty of savings so far as money is concerned, and probably more so for me because lots of us are busy, we have our jobs, we've got our families or whatever. Saves a lot of hassles. It's set and forget. Once a month the payment goes in, I don't need to worry about it.
And you mentioned you don't own it but you control it. Was that a factor for you?
I certainly, look, I know something about property law because I've studied it at uni and also sat in on your classes in my TAFE course. So I understand that from the legal perspective, I can benefit from all of that capital growth without effectively legally owning the property. And that's fine by me.
Okay. So in terms of comparison with the property you bought, which was a bungalow in a suburb in South Australia called Unley Park, comparing that with direct ownership, why wouldn't you just go and buy a property in Unley Park for $700,000 and sit on it and put a tenant in it?
Okay. One of the issues is the cash flow. Like it would be much easier to buy, say, $200,000–350,000 properties, and the comparable rent, you wouldn't have so much of a negative cash flow. But to buy a $700,000 property, and this property would be lucky to get $500 a week, you're going to have a very big negative cash flow. So trying to convince the bank that you can cope with that is a different story. One of the other great things was I didn't have to go to the bank for this.
True.
For the property that I bought, I've got enough cash flow. It comes out once a month. I don't need to go to the bank to borrow any money. I don't need to show financials to anyone. It's nice and clean. So, but I'm not saying that all of your assets should be Poppies.
No,
I think the great thing about direct investment in property is you do have control, and you can easily use the equity to go and buy more property. But just as a mix in your property portfolio, it's fantastic. Here's one where I don't have to worry about any tenants, no maintenance, I didn't have to go and get a loan for it, but I will still benefit from all the capital growth just like I will from all the other properties that I have that I actually own.
And in terms of structure, the manner in which you hold the Popi, the ownership structure of the Popi, did you consider in your own name a family trust or some other structure or vehicle?
Yeah, well, we ended up going with a self-managed super fund. Like at the moment, buying property in self-managed super funds is very topical, very popular. I saw this as a great asset to have in my self-managed super fund. One of the great things about self-managed super funds is the tax concessions.
Yeah.
So, yeah, in theory, I'll make a lot of capital gain, but based on my age and hopefully when I will take control of the property, I'll be in a position where I'll pay minimal or no capital gains tax. Now, I don't know of any other vehicle, whether I bought it myself or my wife and I, or in a company or in a family trust, where that was going to happen. So for me, purchasing it in my self-managed super fund was great. The other bonus is it can be hard to borrow in a self-managed super fund, or certainly harder than if you're buying on your own. Didn't have to go to the bank for this.
That's right.
Nice and simple.
You just fund the payments out of your regular contributions.
That's
into
right.
your fund.
That's right.
In terms of your long-term objective with the property in particular, the seniors who are in the property, I think, are 71, 70 years of age respectively. You could be in this Popi vehicle for another 20 years.
And if I was in there for another 20 years, I'd love it. Because historically it's been shown since World War II, property doubles every 8.5 years. So if I was in there for 20 years, this property is going to be worth 2.5 times more than what I paid for it. And all I've done is pay a monthly payment once a month for 20 years, and I can realise all of that capital gain. So for me, the longer I'm in the property, the better off I'm going to be.
So you hope they live for a long and healthy, fruitful life?
100, yes.
And do you have any vision about what you want to do if the Popi realises itself early? You're going to buy the property, live in it, move it on? Today,
there is development potential. Now, if I'm in a position and interested in developing in 20 years' time, and the zoning hasn't changed, that's certainly something that appeals to me. Otherwise, I have no intention of owning it in the end. All I want to do is sell it and then realise that capital gain. Because I've got 4 kids. This place is only a 3-bedroom home. I mean, within 20 years, all the kids would have gone. But I don't need that sort of property in 10 or 20 years' time, either as an investment or somewhere to live in. So all I want to do is sell it and just realise the capital gain.
Did you give some thought to what if your circumstances changed during that 20-year period?
Yeah, well, I've discussed it with my wife and my kids. Most of them are adult kids. They understand property because they've been brought up in a property household. And they understand the benefits of Popi. You know, they've seen the other side. Like when the tenants ring me or the property manager rings me, Dad's gone out because the hot water system's gone, or he has to meet the property manager because the tenants wrecked the place. So they've seen that side, and that's one of the things that holds them back from investing in property. But they've driven past the property, they see it's in a lovely area, beautiful home, no hassles. So I said to them, you know, if anything unforeseen happens to me, you've got 2 choices. The money still keeps coming out and you still have control, or you don't pay any more, which means you don't have any option to buy the property in the future. I would strongly encourage you, because I have 4 children, amongst the 4 of you, just keep it going.
Yeah. It's a possibility, I suppose, that any one of your children might choose a Popi as a means of themselves getting into the property market.
That's right, because, you know, everyone's screaming, the young ones can't get in, they can't save. Well, I think they can't save for a deposit. Other people are saying they can't afford a deposit, but I think, you know, that's a different topic. But the beauty is, if you can't get into the property market because you don't have a $40,000 or $50,000 deposit, if you've got a few $100s, or if it's an expensive property, say around $1,000 a month, that you can spare, then why wouldn't you? You're getting, because the way to make profit in property is through the capital growth. The rent just helps pay the bills.
Yeah.
So if you're looking to make the most out of property and you know it's from capital growth, here's a very hassle-free, relatively easy way to get some exposure to property. And then if the young ones have, let's say, a 10-year goal of buying a property, if they do have the option of purchasing that property within 10 years, they get all of that capital growth. It'll be much more than a sizable deposit on another particular property that they can live in. So it works for me, who's, you know, over 50, put it in a self-managed super fund, and it also works for the young ones who don't have a deposit.
If you had to indicate what perhaps the 1 or 2 negatives might be from an investor perspective in a Popi, Would you be able to identify those?
Well, the only one is because I bought the first one and I was thinking, why doesn't anyone else see that this is a good idea? Am I missing something here? But I got independent legal advice myself. I know enough about property. There's a caveat on the property, and having personally dealt with caveats before, I know that they work very well. So, one small negative might be, well, maybe the caveat hasn't been structured correctly and it all falls over. But to me, that's a very small negative. There are so many other huge positives. And as I said, I've had the document looked over. I'm very confident that it'll all go well. There are no guarantees in life, but this is also quite risk-free compared to direct property ownership, in that if the property market drops as it has, since the GFC, the bank comes knocking on the door and says, Pete, you need to sell because, your mortgage is actually more than the property's worth. They're not going to come and do this.
They don't have that issue.
No.
And if the market moved down here with the Popi, you suppose you have the choice of hanging on through the ride, through the curve. You could stop paying, in which case, of course, your contributions have been lost. But they're not much different issues that you'd face if you own direct.
No. There are far more advantages than disadvantages through this. But as I said earlier, I'm not saying that all your investments should be Popi, but certainly to diversify your property portfolio, it's a great way.
It's a great way to slot in there. Great. Thank you for your time.
Pleasure.
Hopefully that's been educational and entertaining. Thanks, Peter. Cheers.
Thank you.